How's it going, guys? Just want to quickly go through Gigacloud Technologies Q1 earnings and just give some quick thoughts on the business, what I'm doing with this position. So, the first thing I'm going to start with, everyone should probably know about is tariffs. So, the management did talk a little bit about the earnings call, and all they just said is they were pretty agile and that they have been agile and dealt with like issues before, but they didn't give anything really that concrete. They also did say that any real impact from tariffs would not be showing up in Q2, but they'd be showing up in Q3, which makes sense to me. These are really long, supply lines, and even though it feels like a long time, it's the main tariffs that were put in place that were really damaging were put in April, so it's only been a month. So we'll have to wait till Q2 and see what kind of guidance they basically give on that. The other thing I want to remind people is that furniture is really expensive to ship. So the impact of tariffs, ironically, is like not as bad because if you are paying $200 for wholesale from China and then $200 to ship it, and you have a 50% tariff, right? It goes from $400 to $500. So like the value of the item, like what you're paying, you're paying 50% tariff on the $200, not the cost to ship it. So what the cost that the end buyer is paying is not as drastically increased, and it's also just like the benefit of having a high margin business. So people think Gigacloud technology is really exposed. They're not nearly as exposed as people think they are. And I'd say like they're probably even less exposed, as crazy as this say, than like a company like Walmart or something. Walmart has very low margins. They cannot pass on big costs to consumers. People are not used to paying $30 for a doll or whatever, like Trump said. So just important thing to understand. And it's also important that they do have a sizable business that's growing outside of Europe. And they also, have businesses where people source furniture from not just China, but East Asia in general. So like Vietnam, China, I think Malaysia or something like that. I forget. So yeah, that's that on tariffs. So let's go through the results real quick, and then I'll get some quick thoughts on what I'm doing in my position. So why the revenue's up only 8% year over year? They acquired they acquired Noble House, I think end of 2023 or something like that for 80 million. So they sold through that inventory. That's why they had massive revenue increases, but it wasn't very profitable. So they are moving to more profitable SKUs on Noble House, and they have said, and last quarter and the saying of this quarter, like you're not going to really see those results till the end of the year. So those new SKUs are coming out. They're seeing good initial responses, but it also takes time. They said 3 to 6 months for these things to properly ramp up, which makes sense to me. So any results from Noble House we will not see till the latter half of the year. And also that's why the revenue is only up 8% year over year. So we could see really good results later in the year. Net income of 27 million was really strong, guys. This is way better than I thought they were going to do. I thought they were going to do like 15 or 16 million. If they do 27 million, and I want people to understand like my basic investment thesis, okay? 27 million in income. We'll just assume it's 27 million in free cash flow, okay? They will do 100 million dollars in earnings a year, right? Now, after this recent run up, their market cap is closer to 700 million right now. It's not being reflected properly here, but if you have $100 million in free cash flow and you put it all towards share buybacks, you can buy back 1/7 of the business every year. So what's going to happen? One of the biggest narratives on Gigacloud technology is it's a fraud. Well, if you are buying back $100 million worth of shares a year, it's hard to be fraudulent, So I think share buybacks will do two things, which is just like it's very accretive as a shareholder to have your position size, your relative ownership increase, but it also remove a lot of the doubt and FUD that exists within Gigacloud technology. So it will change the narrative, and it'll also drive massive EPS growth as we swing out on the other side later in this year. So it'll be interesting to see how this business develops, and tariffs are obviously still risk. Now, this is a great thing to see, and this is one of the reasons why I'm really excited to see how this business develops for the next year or two, is their 3P highlight is growing really strongly. So it's 50% year over year. We can see both their active sellers and active buyers have increased again. So I actually have some of the KPIs here, and we can see the 3P volume has been going up, like clockwork every quarter, right? Since it was introduced way back here in 2023. I mean, this business is actually more than doubled over the last couple of years, which is really strong growth. And the only reason the spend per active buyer is going down is because they're literally growing their buyers so fast, right? So this part of the business I think has a good runway ahead of it for continued growth. So for anyone who doesn't know what 3P is, all they basically do is Gigacloud technology provides logistics for buyers and sellers of like furniture or just large items on their platform. and they take care of like the hard part of getting it from point A to point B. That's pretty much what the main business they're offering here. So yeah, in general, strong results. They gave guidance. I think it's farther down here. Let's see, maybe Outlook. Okay, they're expecting to do 275 million and 305 million in the second quarter of 2025. So for this quarter, they did 272 million. So I don't. We'll see where they end up on this guidance, but it's like they could end if they end up on the higher end of this guidance. Like I think there's a good chance they do 30 million in earnings. It's kind of hard to know because their margins and stuff. It can be a bit cyclicality here, but that would put us at 50 million or almost 50 million earnings for the year, which is pretty good, right? I think, and if they're gonna have a better second half of the year, I don't know. I think it's pretty bullish. That's just my opinion. Here's the most important thing. So in September, they authorized 46 million, and then they increased it to 62 million in March, and then they bought back all 62 million worth of shares so far. So what's interesting is they didn't really do any buybacks in Q4. I don't know why, but they did go extremely hardcore on the buybacks in the last few months. I did email management after last earnings call, or the investor relations, and I literally was like pretty insistent. I have no idea if that did anything. Maybe it did, maybe it didn't. But they are buying back shares very aggressively right now. And 62 million is probably close to representative of almost 10% of their shares outstanding, which is really good. And today they actually announced that they're increasing their buyback by another 18 million. I forget where they have that. Is it not here? Anyway, it's somewhere here. Oh, here it is. Yeah. The board approved an additional 16 million, bringing it to another 78 million. So I fully expect that they will execute this 16 million and through this quarter, which should be good. I think they should be doing more. I don't think they're buying back aggressively enough. Like you just did 27 million. You should probably just invest all that in buybacks, but it is what it is. It's better than nothing. So yeah, the last thing I just want to point out that I like to see is, Germany revenue is up. This is like, I think 75%. Here it is. Germany's year over year. So it's growing quite nicely. And it's actually, you can see, helped offset some of the decline in United States revenue year over year. So where Europe goes, I don't know, but I would love to see if Europe could be like 50% of their revenues. And it would be great as well if service revenues, which we can see here, is 94. I would love to see if services could get up to half their revenues as well eventually. That would really change the dynamics of the business. It'd be much more robust. They'd have much more, I think, consistent revenue and earnings because they'd have diversification of lines of business, and it'd also be a much higher quality business. If service revenues started to outgrow some of these other businesses, I think there's a chance that they could get re-rated much higher in multiples. So we'll see. For my position, let's just go look at it here. I am still holding. God, where is it? So I originally bought around $20 and then I sold like lower to try and recognize some losses. So I'd like sold and rebought right away, but I don't think that actually works. I think there's like rules against that. But my current P&L is like more like $0 right now, basically, is what I'm saying. So I took like a 3,800 loss originally, realized, and then I have an unrealized $4,000 gain. So I've kind of round tripped this. I did, hold this all the way down. I actually bought a few hundred shares. I wonder if we can see that here. Yeah, you can see I bought a few hundred shares in like the 12, or I guess 250 shares in the $12, $11 marks. This sale was just, I bought a bunch after last earnings and then I sold because I felt like I felt like it was I had too much and I had made like a modest profit. You can see like 10% gain here, but I still own, it's still a sizable position in my portfolio, which I'm pretty happy about. So what am I doing now? I'm going to hold. I am probably going to add here actually. So I have some other stuff I want to add to, but I do want to kind of see if I can get this position to maybe like 2,000 shares. So I want to see if I can add maybe like 50 shares a month. I think it's like super doable, and I would like to continue to grow this position. I still think Gigacloud technology is cheap, and I still think this company will eventually get re-rated back to $40 a share. I do think you're going to have a lot of patience though with that, and I think there's a good chance we see that at the earliest later this year, but I think this could definitely take a couple years. So, um, so far I feel like there's a good chance. Hopefully the bottom is in here. I think $11 was ridiculously cheap. So, yeah, excited about the future of the business. So yeah, that's it. Any questions? Just let me know in the comments.